If you look at the valuation of Wefox, we think it's very compelling. Earlier on this year, it raised money at a valuation of 2.5 billion euros. But if you actually look at the valuation multiple compared to listed peers, it trades at a substantial discount based on that recent funding round. Peers like Lemonade and Goosehead, for instance, trade on significantly higher EV to sales multiples than Wefox. So we think here that we have a very disruptive, very innovative, fast-growing business disrupting a huge industry, the insurance industry across Europe, that trades on a very compelling valuation multiple. And now I'd like to introduce you to Julian Teicke, the founder and Chief Executive Officer of Wefox.
Thank you, Richard. My name is Julian Teicke and I'm the founder of Wefox. Wefox is the #1 Insurtech in Europe. We are a digital insurance company selling life, P&C, and health insurance products via digitally enabled insurers. And I'm going to explain to you our strategy on how we became the #1. If we look at our history, we have always been very fast growing more than 100% in terms of top line. Last year, we've grown significantly more than 100%. This year, we're going to grow from around 120 to more than 300 million. Our plan next year is around 800 million. So our focus is aggressive growth. But we have also a very, very important focus on what we call the automation rate. If we look at the incumbent insurers, they have a legacy problem, which means they work on legacy technology and they have a very, very low automation rate. So we're proud to have an automation rate of around 80%. We aim to get to 90%. And that's a huge differentiator to the legacy players out there. Also, we are multi-country on a single tech platform, which is also a very, very important differentiator to the legacy insurance world. While the incumbents typically build insurance products per market on a different tech stack, we have a central product factory and build our insurance products for all international markets on a single platform and can deploy them within seconds via API. We have a very strong distribution network that distributes our Wefox insurance products. It's around 700 exclusive advisors selling our products. We have more than 5,000 brokers, and we are entering the affinity sales channel as well as a third strong pillar of distribution. Not only are we fast growing, last year we've also been able to already be profitable on our insurance book. And this is mainly due to our focus on loss ratios. I'm going to explain to you how we got there, but essentially we are around 11 percentage points below the market when it comes to loss ratios. And one very important element of our growth strategy is identifying the right targets in terms of distribution, helping them increase their revenues, their productivity through technology, launch our own insurance products on the top of this platform, and then distribute our insurance products and replace the GWP that they've generated for other third-party insurers prior. I give you one example. We've just acquired a company that generates around 100 million in commission revenues. We're going to now deploy our technology and we're going to increase their distribution revenue significantly. We have proven to be able to do this on several other occasions already. For example, in Switzerland, we have increased the revenues of a distribution target from 15 million when we acquired them to 45 million, and from 2 million in EBIT to 9 million in EBIT within just 12 months. So we anticipate that we're going to be able to do the same with this acquisition target just now. But the really interesting thing is, today, they generate around 600 million in GWP for their insurance partners. We're going to be able to replace the entire GWP with our own insurance carrier and tap into an additional 60 million of EBIT. So increase without growth, which we're very optimistic we can, increase from 100 million in revenues and 30 million in EBIT to 600 million in revenues and 90 million in EBIT. We call this our international growth strategy. So we are a successful M&A consolidator. So what is Wefox? We are the most profitable full stack insurer, and we believe that only by owning the entire value chain, from lead generation to claims management, and making sure that we use technology to automate as much as possible, to create better products and a better customer experience, we can really deliver on our purpose, which is make insurance 10x better. So let's look at the ways that we have driven our growth. So the first thing is we're growing fast because we focus on indirect distribution. I will explain that in a second. But then also we have to look at how can we actually not only grow fast, but grow fast in a sustainable way. That is the challenge in insurance. So we are achieving lower loss ratios than the market through indirect distribution. We are reducing the administrative costs through technology. And we have lower sales costs than the market by increasing the efficiency of the sales force with technology. So let's jump into the first point. How are we growing? So 9 out of 10 policies are sold by the independent advisor. And that's exactly what we focus on. Digitizing the 90% of the distribution rather than trying to grow the 10% of the distribution. So Wefox is really focusing on where the business is. And there's lots to do in digitizing indirect. And indirect means brokers, advisors, and affinity channels. And that's a real differentiator to many insurtechs out there who go the direct route. We call the direct route the worst of all worlds. And no one has really proven to be able to crack it. You have very high customer acquisition costs because you're in a big competition. You have higher loss ratios than what we've seen in any other distribution channel because it's a type of negative selection. And you have the lowest loyalty of customers coming in via the direct channel. So it's extremely difficult to get the unit economics under control. So with our indirect distribution approach, what we really focus on is build the technology and the insurance products for advisors to digitally enable them to sell significantly more products. We have 700 of them. To build technology for brokers to manage more customers and sell products easier. We have 5,000 of these brokers. And to build the best in-class API-first products for affinity channels. And this way we're reducing the customer acquisition costs. We have significantly lower loss ratios, and we have a lower churn, enabling us to have a significantly better LTV to CAC ratio than anyone in the Insurtech space. This year, we are creating around 24 new insurance products for all of our markets. That's a new insurance product every 2 weeks. Next year, we're ramping this up to 50 insurance products a year. That's a new insurance product every week. And we do so by really listening to our advisors. What are the products they need? And we build products fast based on the demands of our advisors. I give you an example. If we look at car insurance, typically an advisor would have to go through 30 questions with his customer. What we do is we simply ask around 5 questions and the customer gets the same coverage as the previous insurer, but at a 5% discount. It's a complete no-brainer for the advisor. It's a complete no-brainer for the customer. It's fast. Everyone is the winner. And this has achieved market leading position in terms of new business in Germany in the first year of launching car insurance. So very simple, straightforward product for the advisor, and for the customer so that we can grab market share. But grabbing market share by itself doesn't mean a lot. It's around profitability, so profitable growth. Because in insurance, everyone can grow. So in insurance, you can grow very fast. You just throw money at the market, but what you essentially do is you build an unprofitable book that will never turn profitable. So fast growth doesn't mean anything in insurance. Fast and profitable growth means everything in insurance. So let's focus on how Wefox is growing fast but in a profitable way. And that is really about how we keep our loss ratios under control. And we use data and technology in our underwriting playbook to sustainably keep our loss ratios under control. So the first step is, of course, we only choose the distribution channels where we know we can deliver better than market loss ratios. And that's where we're not going into direct. That's why we're focusing on A, brokers, affinity, and C, our own advisors. They deliver a couple of percentage points lower loss ratios than the market by definition. But the second point is a very important lever. It's a product selection. So we are only launching insurance products and product categories where we know we can beat the market. For all other products, we're going to not offer our own products. We're going to sell third-party products. We're just focusing on the products that make a profit. And the third piece is the underwriting selection. So we make sure that we have access to more data than any of the incumbents to assess what is the loss ratio of a certain cohort. And not only are we better in pricing, and we essentially don't overprice the profit zone. So many insurance companies, what they do is they analyze the data and they underprice the loss zone and overprice the profit zone. We're going to get there in a second. We don't do that, and that's because we have significantly more data that we analyze. And we learn faster from our mistakes, because that's a very important lever. If you make a mistake in underwriting, we manage our loss ratios, underwriting rules, and pricing on a daily basis. The big incumbents do this on a biannual or annual basis. So if they do mistakes, it's late for them to fix it. They figure it out and they fix it, but until it's deployed in the technology, a couple of months, we're late in the game. And we're going to have accumulated losses. We essentially price and adjust our prices and underwriting rules on a daily basis. So when we make mistakes, we can fix them very fast, keeping the losses lower, keeping the negative impact on the loss ratio lower. And this approach allows us to have a significantly lower loss ratio than the market, and even price lower than the market that fuels growth and still have 11 percentage points below the market. And we see that. So over time, we've significantly reduced our loss ratios, and we really use technology and data to keep it this way. Then, of course, one of the big levers in order to really build a sustainable new tech insurance company is focusing on reducing the administrative costs. And this is something that insurance companies traditionally never had to do. They never really had to focus on efficiency in their internal operations, in their technology stack. Why? Because they have made their profits not from the risk margin. They have made their profits from the capital returns. But this time is over. Unfortunately, now it's a mess with insurance companies. So for us, it's a huge advantage to have been able to start an insurance carrier from scratch. And the advantage is that instead of having 10 to 15% automation rate, which is what the incumbents have, we have 80 aiming to get to 90%. And instead of taking 6 months of launching a new insurance product, we take a couple of weeks to launch a new insurance product from idea to deployment, saving significant costs. So this means once we have the size of the book of an Allianz or an AXA, we're going to have significantly lower administrative costs through the focus on automation. And the third piece is the focus on sales efficiency. So the way that we make sure that we have lower sales costs than any other insurance carrier out there is that we acquire leads for our advisors. And on the first sale, these customers are already profitable. So we have instant payback. Because what we do is we sell a high margin third-party product with a large one-off commission. This makes the customer profitable on day one. And what this essentially means is that from there on, we can start selling our own insurance products focused on profitability to increase the customer lifetime. And the more insurance products that we are launching, the higher the customer lifetime value of our customers. And as said before, we're launching 24 products this year, 50 products next year. We're extending our entire range from P&C, then to life and to health. So that means with the strategy, our LTV to CAC ratio will dramatically increase over the upcoming years. So Wefox's secret sauce is really a combination of several things. So first of all, we're looking at a huge market. It's a $5.2 trillion industry ready to be disrupted on a global scale. We generate fast growth because we focus on the 90% rather than the 10%. So indirect distribution via affinity, brokers, and advisors, and helping them via technology to sell more at better conversion rates and better customer experience. Then we use analytics to decrease the loss ratios. So understand what are the good cohorts that we want to underwrite and what's the pricing, and what are the customer groups that we're going to use the technical price for, so it's way too expensive for them to ever switch to us. We don't want them on our book. We reduce the administrative costs with technology, high automation rate, fast time to market through a central product factory. And we optimize the unit economics via our digitally enabled sales. And this creates a strong flywheel for growth that is profitable. But of course, it is not only around changing the economics of insurance and building a large player with better unit economics. It's also going with the time and understanding what's the real, true impact of technology on the future of insurance. Insurance companies, the legacy insurance companies, they are in a catch-22. They have attracted the investors that have the highest dividend expectations, the most risk-averse investors. So on a yearly basis, they pay out high dividends and they cannot invest into the future. But if they would stop the strategy today, their share prices would plummet. Because essentially, the risk-averse investors would leave, and the tech investors don't believe in their capability to really innovate through technology and shape the future of insurance. So they're stuck to this model. We will not get into this model. We will focus on investing into innovation. And innovation means innovation of the core. So for example, the one policy. We're going to extend our product line so that an advisor and a customer have a single interface to everything insurance related. And the insurance policy covers all parts in life and adjusts based on changes in your life. simplify the experience of insurance tremendously. And if you increase the bundling quota, which essentially is what we're doing, we also increase the profitability even further. The second project is called risk prevention. And we believe this is the biggest impact of the IoT data revolution that we're currently undergoing on insurance. Insurance essentially is a product based on data. So today, you have a mathematical model with a couple of input variables and a output of how expensive, based on static data, it is to insure a customer. It is reactive. We believe that the IoT data revolution, with your mobile phone and all of its sensors collecting a lot of data and your IoT devices, we can turn this to become proactive and turn insurance from a product that just pays out when something has happened, when it's already too late, to a product that actually prevents bad things from happening. And this is our focus with our initiative of Wefox Prevent. This is further going to reduce loss ratios, but this also will create cheaper prices for customers and a happier, longer, and healthier lives for our customers. So very important strategy. And the third one is the platform. We invest a lot of money into building a very sophisticated platform that allows us to sell P&C life and health insurance via API into multiple distribution channels. We're going to continue to evolve this platform, and we're going to make sure that in every single geography we can set up our insurance products very fast, and we can sell them extremely easily via distribution channels, via API, and we can adjust the products very fast. And every single process to be able to manage this insurance product will be handled via an API. So over the next couple of years, this platform will become more ripe and more sophisticated, until we reach a point where this is a really great product for every single insurer in the world, connecting via API to any distribution player in the world. And we're going to open the platform for other insurers connecting to different distribution channels. And we believe that this is the only winner-takes-it-all play in the insurance world. A platform that transacts digital insurance, and we can take a cut of that revenue. So 3 very important strategic initiatives that we're focusing on, besides our core business of fast growth and healthy unit economics, which differentiates us from all other insurtechs that are currently out there. Thank you very much for your attention, and I wish you all the best.